Do not buy a single ounce of silver until you watch this video. I'm dead serious. Last week, JP Morgan, the biggest bank in America, closed their short position at the exact market bottom, the exact minute, and then they pinned it on the Fed chair. $7 trillion gone in 30 hours. That's not a typo. $7 trillion. Silver crashed 31% in a single day, the worst collapse since 1980, and mainstream media is telling you it was because of some Fed nomination? Nah. What happened on January 30th, 2026 wasn't a crash. It was a heist. And over the next 9 minutes, I'm going to show you exactly who pulled it off, how they did it, and why the same people who just stole from retail investors are now positioned to make billions more. And if you don't understand what I'm about to show you, you're going to be their exit liquidity. Again. Okay, so let me paint the picture of what actually happened. January 29th, 2026, Thursday morning. Silver hits $121.67, all-time high. Higher than the Hunt brothers ever got in 1980. Regular Americans are celebrating. The Wall Street silver community on Reddit, 122,000 members strong. They're posting screenshots of their gains. One guy arranged his silver coins to spell out, "Kiss my ass, Jamie Dimon." Jamie Dimon, by the way, is the CEO of JP Morgan. Remember that name, he's going to come up a lot. So everyone's winning. Everyone's happy. And then, Friday morning, 7 a.m. Eastern, Trump announces Kevin Warsh as the new Fed chair. Now here's where it gets interesting. The algorithms didn't wait for analysis. They didn't wait to see what Warsh would actually do. Within seconds of the announcement, silver starts crashing. $121 to $114, then $114 to $95, then $95 to $75. By 3 p.m. that Friday, silver had lost 31% of its value, the worst single day in 45 years. And here's what CNBC told you. Markets reprice metals after Warsh appointment shock. Yeah, that's the headline. That's what they want you to believe. But here's what they're not telling you. Wait, it gets way worse. Because what I'm about to show you isn't just about silver. This is about the entire system. Let me show you who was really behind this crash. JP Morgan, Jamie Dimon's bank, had been holding a massive short position in silver for years. We're talking 200 million ounces. That means they were betting that silver would go down. But here's the thing. Silver kept going up and up and up. From $30 to $50 to $80 to $120. Their short position was bleeding billions. So what did they do? They crashed the market. On January 30th, JP Morgan closed their entire 200 million ounce short position at the exact market bottom. Then they flipped long. They now own 750 million ounces of physical silver. That's the largest private silver hoard since the Hunt brothers in 1980. Think about that. And this isn't conspiracy theory. This is documented fact. In 2020, JP Morgan paid a $920 million fine, the largest in CFTC history, for manipulating precious metals markets. Two of their traders, Michael Nowak and Greg Smith, were convicted under RICO statutes. You know what RICO is? It's the law they use to prosecute the mob. The federal government literally prosecuted JP Morgan traders as organized criminals. And you know what changed after that $920 million fine? Nothing. They just got smarter about it. But here's the part that should terrify every American with a 401k, because this wasn't just about silver. See, while everyone's focused on silver, there's something much bigger happening. Right now, today, the average American is carrying $6,580 in credit card debt, at interest rates over 21%. That's the highest rate in recorded history. And you know who's making billions off that 21% interest rate? JP Morgan. Jamie Dimon was just at Davos last month. Trump proposed capping credit card interest rates at 10%. You know what Dimon called it? And I quote, an economic disaster. Let me translate that for you. Charging regular Americans 21% interest is good for the economy. Capping it at 10% is a disaster. Meanwhile, the national debt just hit $38.4 trillion. That's growing at $8 billion per day. We're paying almost $1 trillion a year just in interest. Not paying down the debt, just the interest. And here's why silver matters in all this. Silver isn't just some shiny metal for jewelry. It's a critical industrial commodity. Every solar panel needs 20 grams of silver. Every electric vehicle needs up to 50 grams. Every AI data center, every 5G tower, every satellite, they all need silver. And there's a global shortage. For 5 straight years, the world has used more silver than it's mined. We're running a 200 million ounce annual deficit. That's like spending $200 more than you make every year, except nobody can print more silver. So why is the price crashing when there's a shortage? Because the price isn't set by supply and demand anymore. It's set by paper contracts in Chicago and London. Contracts for silver that doesn't exist. Right now, on the Comex exchange, there are claims on 890 million ounces of silver. You know how much physical silver is actually in those vaults? 77 million ounces. That's 11 paper claims for every single ounce of real metal. It's like if you bought a house, but 10 other people also have deeds to the same house. When everyone shows up to move in, someone's not getting a house. And here's the part that's going to blow your mind. China just made a move that changes everything. On January 1st, 2026, China classified silver as a strategic material, same category as rare earths. They cut the number of companies allowed to export silver from over 100 to just 44. Here's why that matters. China controls 60 to 70% of global silver refining. They're not selling it to us anymore. They're keeping it for their own solar panels, their own electric vehicles, their own tech. And right now, silver in Shanghai is trading at $111 per ounce. In New York, $78. That's a 42% premium in China. When's the last time you saw a 42% price difference on the same commodity in two different markets? Never. That's when. Because it's not supposed to happen. Traders are supposed to buy cheap in New York and sell expensive in Shanghai until the prices equalize. But they can't, because China won't let the silver leave. So what happens when the paper market in New York is saying silver is worth $78, but the physical market in Shanghai is saying it's worth $111? One of those prices is lying. And when the truth comes out, and it will come out, the repricing won't be gradual. It'll be violent, overnight. And the people who position themselves on the right side, they'll make fortunes. Guess who's already positioned? JP Morgan. 750 million ounces of physical silver waiting. Look, I'm not going to tell you what to do with your money. That's not my place. But I am going to tell you this. The same banks that crashed the market, the same banks that paid $1.27 billion in fines for manipulation, the same banks that charge you 21% on your credit card while telling Congress that capping rates would be a disaster, they're not your friends. They're not trying to help you. They're trying to be on the other side of your trade. So the question isn't whether silver is going up or down tomorrow. The question is, do you understand the game you're playing? Do you know who's on the other side? And do you have a plan? Because if you don't, you're not a player. You're the product. If this opened your eyes, smash that like button. Subscribe if you want the truth about what's happening to your money. And drop a comment below. Tell me, did you hold or did you sell on January 30th? No judgment, just lessons. I'll see you in the next one.